Good day, Junior Techies. I'm Mrs. Brimacombe. We are going to look at Inventories, Chapter 8, Activity 5. Superstar Limited. Superstar Limited is a business that supplies bicycles, bicycle shoes, and clothing. They also do repairs to bicycles. There are 3 different departments, namely the bicycles, shoes, and the clothing department. Each department is run by blue, red, and yellow. They make use of the periodic inventory system. So if I look at the information presented, the business used the following methods of evaluating the stock. So if we look at the clothing, weighted average method, shoes, FIFO, which is first in, first out, and then the bicycles, which is also making use of FIFO, first in, first out. So this is again an example of an activity where we're not only testing one specific way of evaluating stock, but we are combining it. Looking at question 5.1, calculate the following on 28 February 2022. So we need to calculate the value of closing stock, cost of sales, and the gross profit with regards to clothing. And remember that clothing make use of the weighted average method. So to calculate the value of our closing stock, when we're using weighted average, we need to take our opening stock plus the net purchases plus carriage on purchase plus any additional cost divided by the total number of units available for sale. Once we've calculated the weighted average price, we need to times that by the number of units which is left over. So if I look at my opening stock, 3,681 plus my purchases, but now 5 items were returned from the July purchases, which means that we're going to say 5 times 202, and then 30 items were returned from the January purchases, which means that we're going to say 30 times 235. To calculate the number of units, it's my opening stock plus the purchases minus the 5 units that were returned in July minus the 30 units from January. My average price is 211. The number of units left over is 9. Therefore, we're going to take 211 times 9. To calculate my cost of sales, we need to take my opening stock plus purchases minus the returns equals available stock for sale minus the closing stock, which we calculated in number A. Make sure that you use your answer that you've calculated in the previous question. That equals the cost of sales. Now that we've got the cost of sales, we need to calculate the gross profit. That means sales minus cost of sales. So my sales was given to me minus the cost of sales calculated in the previous question equals the gross profit. Question 5.2. The business considers changing their stock validation method. They want to do it legally and follow the correct method of changing from weighted average to FIFO. So if I look now and I compare the weighted average with FIFO, remember we can use the periodic inventory system, the trading account, as our workings. If I look at opening stock is going to be exactly the same. Purchases is going to be the same. Where is the difference? The difference is in the closing stock. Because my closing stock weighted average, we needed to use the average price, which is 211. But when we're using FIFO, It means that we need to look at our most recent purchases to calculate our closing stock, which means that if 9 units is left over, that is 9 units which is left over from the January purchases, and the cost was 235. So that's the reason why there's a difference. This is the weighted average price. FIFO, my most recent prices. So it's more realistic. This is why the closing stock balances are different. Because of the closing stock that is different, it means it will have an impact on my gross profit. Using FIFO, my gross profit will reflect a higher amount. So to answer this now, why do you think they want to change from weighted average? The unit price of the stock bought in January was 235 per unit. However, if we look at the weighted average, it's 211. So there's a 24 Rand difference. If we look at the value of the closing stock, using weighted average, it is less than using FIFO. And as I've mentioned earlier, the gross profit will show a higher amount using FIFO. Give advice how to go about doing the changeover legally. You need to contact SARS, the South African Revenue Services, and apply or request or notify them before changes can be made from the weighted average to the FIFO method. 5.3. It appears that the clothing department must deal with several challenges. Explain these challenges, quote figures to support your answer. Give a possible solution to each of the challenges that you've mentioned. If we look at the clothing department, working days per year is 250 days, but the days worked by the manager is only 170 days. If we look at returns, 5 items were returned in July, 30 items were returned from the January purchases. So that is a lot. If we look at our closing stock, there's only 9 items left over of clothing. So the challenges the business is facing, this department specifically, yellow is taking too much time off. You need to make sure that you show and quote figures. 80 days was taken off during the year, 250 minus 170 days. So a solution is to investigate reasons for the absenteeism. You may need to appoint an assistant manager if the reason is due to illness. If we look now at the amount of stock left at the end of the year, there's only 9 items left over. So advice or solution, we need to make sure that we control our stock better. We need to make sure that we order new clothing sooner. Apologize to and take customers' details to notify when new stock is available. Then if we look at the items returned to the suppliers, 5 items in July, 30 in January. So we need to investigate the reason for these returns. We need to possibly find a new supplier if it's inferior quality. Question 5.4, name one area in the department which is well controlled. If we look at what is well controlled, there's no units that were written off. So that is a positive for the business. Question 5.5. Now question 5.5 goes about the shoes. It has been found that the sport shoes written off were delivered in September. Calculate the number and value of the shoes written off. To find out the missing shoes, the number of units which is missing, we have to take our opening stock, which is 70, plus our purchases, 680, there were no returns, minus my sales, 640, equals 110 units that should be left over. But my actual stock, my closing stock, is only 74 units. There's a difference of 36, which means 36 units are missing. This was from the purchases in September. The cost in September was 480. This is why we need to times that 36 with 480 to find out what was the value of the closing stock which is missing. 5.6. Give possible reasons that could have resulted in units going missing in the September delivery. So if we look at possible reasons, quantity of goods not checked on delivery. When stock is delivered, it's very important that we check the number of items which we've ordered and was it actually being received. Invoices and delivery notes not controlled as to the quantities received. The supplier delivered too few items and we never checked, so we never realized that there's anything missing. Stock was not securely locked away after delivery. So those are all options. Question 5.7 focuses now on the bicycles. Remember that the bicycles we're using FIFO. So they've asked us to calculate the cost of sales on 28 February 2022. Cost of sales is my opening stock plus purchases plus carriage plus any other cost minus my closing stock. If I look at what has been given to me, my opening stock is given 315,000. My total purchases, but now make sure that you read all the information. Returns, 5 bicycles were returned from the July purchases, which means that we need to take 5 times 4,500 and subtract that from the total purchase price. That equals my net purchases minus my closing stock. But now I first need to calculate what is the value of my closing stock. Closing stock, 162 bicycles is left over, which means that if we're working with FIFO, we need to look at our most recent purchases. There's 190 units that were purchased in January, which means that all of that 162 is left over from the purchases in January. This is why we're going to times it by 5,200. Now we can calculate our cost of sales. Question 5.8. The owner is concerned about the management of stock, in particular the stock levels. Provide a calculation to support his concern on stock levels. Take into account that the stock holding period for 2021 was 49 days and the stock turnover rate was 7.4 times per year. This means we need to calculate now the stock holding period and the stock turnover rate. To calculate the stock holding period, we have to use now our answers that we've calculated in 5.7. In 5.7, we calculated the closing stock and we calculated the cost of sales. My average stock is beginning plus end divided by 2. Opening stock, 315,000 plus the closing stock calculated divided by 2, and we need to use the cost of sales, which we've calculated in 5.7, times 365 days. That equals 83.6 days. Another option is to use the units. By using the units, we're going to take the opening stock, which is 90, plus the closing stock, divided by 2 to get the average price. Once we've got the total, 126, we're going to divide it by the number of units that were sold. The number of units that were sold was 592, and now we need to times it by 365. Take note that there is a difference between the two different ways in which we calculate it if we look at the number of days. To calculate the stock turnover rate, we now have to use the cost of sales divided by the average stock, which means that it's 4,3 times per year. If we use units, we have to take the number of units that we sold divided by the average stock, and that equals 4,6 times. So now when we explain, when we compare, there's a reason why they provided you with last year's figures. The stock holding period increased from 49 days to 83,6 days in 2022. Make sure that you quote the figures which you've calculated in your answer. If you use the number of units, you would have said it increased from 49 days to 77,7 days. If we look at the stock turnover rate, it decreased from 7,4 times per year to 4,3 times. If you're using the number of units, you would have said the stock turnover rate decreased from 7,4 times per year to 4,6 times. The business is keeping stock for longer periods of time and taking longer to convert the stock into cash. Remember, the slower it takes us to sell our stock, the longer we are keeping it. It's not a good thing. This could negatively affect the liquidity. Question 5.9. The owner is currently only selling one type of bicycle. He would like to expand his target market and introduce another type of bicycle, a mountain bike. What method of evaluating stock would be best suited for introducing another type of bicycle? Provide a reason. So if we look at this, the best would be the specific identification method. Why? These will be different types of bicycles which have a different cost. It's easy to identify the cost of each bicycle. Thank you very much. Next, we're going to look at activity 6, which will be more focused on problem-solving questions. I want to leave you with this quote: imagine with all your mind, believe with all your heart, achieve with all your might. Have a wonderful day.